Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 3rd of November, comes to you from Amsterdam. And I'm speaking at the EMART conference here on energy markets today. So first of all, we look at the US dollar. This falling away here, much as we'd sort of been seeing on the short-term charts, we're below the trend. The Fed's comments last night haven't really helped the dollar. It was fairly neutral comments, but the fact is we're in a downtrend. So whatever the news, the market had already priced in this move. So we are just seeing the dollar pulling back here, and the US election, of course, creating quite a lot of uncertainty, not far away now. And if we look at the euro, of course, the picture is reversed. The euro has been in a short-term uptrend the last week or so, and we're seeing that here in the daily chart. But we are still below the cloud, both in the long and the medium term, with lots of downside targets. So this is probably just a counter trend move. Japanese yen, we look at the yen against the dollar, a very good measure for understanding risk. Of course, the dollar buys more yen, so here we're seeing the dollar falling against the yen, and this really represents a risk-off trade. We had a target of 102.50, and that was given at about 104 and a third, and we are now seeing a move towards that. If we look at sterling, sterling is recovering as well, but this again is mostly about the weak dollar. So dollar weakness just showing through here in the run up to the election. So again, this move may well be temporary. Key thing on sterling is we are in this range, and if we just look back on that range, we see here that we are just breaking higher than we have for the last couple of weeks. So this is quite positive. We are seeing a new upside target of 125 activated now. The downside target's coming off on this short-term chart, but just watch for any renewed weakness there. Of course, the medium and long-term pictures are still pretty bearish for sterling. And if we look at the euro sterling chart, we see here that we still have downside targets for sterling. So sterling still does look weak against the euro, and if we look at other currencies like sterling Swiss, this is a good way just to understand the recovery in sterling, to see really that sterling move against the dollar is mostly about dollar weakness. And again, if we look at the Australian dollar against the Aussie against the sterling, we see here really that we're still very much on the floor. So dollar weakness is the message at the moment. If we look at stock markets, the last few days we've been quite bearish on stock markets. We've had quite a lot of downside targets here on the S&P 500. We've had these targets in train now since middle of September, late September. These targets have all been hanging over us, and now they're coming home to roost. This is really what we've said. We said there was a good few percent downside. We're seeing that. Lagging line last night closed straight on the cloud support here, and we've had 7 days in a row of a downside move. We're seeing the last few weeks have been bearish just with these candles. So, this is the long-term weekly chart, remember, daily chart and the 60-minute, and we're seeing here that we have just closed. So if we have a rise today in the market, then that would be a bounce off support. So we've got quite a bit of work to do, but will the market go lower? The key thing is we do have these downside targets, but we are nearing those levels now. So after such a run of negativity, we might just start to see a floor. But the long-term picture is still bullish, the medium-term picture is still bullish, but the short-term picture is pretty bearish, reflecting the short-term uncertainty surrounding the election. So don't be surprised to see more of a sell-off, and the Nasdaq, we're seeing that playing through fairly aggressively as well. This market finding support here, quite a lot more support with the cloud, so quite key. The Russell 2000 sold off 1.3% last night, so we are seeing on US stocks the broader market is being hit much harder, twice as hard as the S&P 500. So interestingly, we are seeing that selling across the board. FTSE, just maybe having made that 7,000 level, just hasn't been able to hold it, and we're now back at 6,845, so quite a long way below the levels that we were just a couple of weeks ago. Okay, so not good news for the UK market. Lots of downside targets kicking in. 6,700, about 2% downside. So the US election having an impact pretty well globally on indices now. When we look at the FTSE 250, the mid caps, much the same picture. And if we look at the German DAX, we see here also that we're seeing that sell off too. Taking a look at the Nikkei has been stronger. Asian indices have been stronger above the cloud. We're still above the cloud on the short term, but yesterday with 1.76, 1.75% fall away, we are just seeing now this coming back. China has bucked the trend a little bit. Hang Seng was down slightly. The Shanghai Composite up slightly on the night, so we're seeing that as well. Also, India just bucking the trend slightly too, and the Australian market has had a pretty tough time of late. If we look at the Australian market, we are just negative here below the cloud too. Brent has had a pretty torrid time the last week, and crude oil prices just falling away. This new downside target of 45.94, 3% away. And we see here we are just holding the cloud support. We are bullish in the medium term, bearish in the short term, but this trend is pretty negative in the short term. And if we look at nat gas, much the same picture here. We're just coming through the cloud on this short-term chart, looking pretty bearish again. A lot of volatility showing through here on the medium and long-term charts. But we are holding the trend here. It looks like we are making a transition long-term. So we think nat gas will probably look better, but at the moment it's just going through that uncertainty. If we take a quick look at sugar has a very big move at 2.5% overnight. So we are just seeing quite a big move off the floor there, but it is pretty bearish below the cloud here, bullish in the long and medium-term charts. The big one we've been calling is gold. We're saying gold would get back above 1,300. We've had lots of short-term targets to suggest that. We did get back above 1,300 yesterday with quite a big move. This again is a risk-off trade, of course, and 1,301 is where we're at the moment, so holding that 1,300 level. And silver showing quite a lot of strength as well. Quite a good lead indicator for if you're watching the gold price. Taking a look at the US bond market, again the Fed comments, of course, weighing a little bit here, and just the weakness into the election. The yield coming back here, back into the 170s this morning. So we are just seeing that move through the cloud here, giving us downside potential of 172. Yields still looking like they will harden to above 2% in the medium and long term, but that's where we're at in the short term. Nasdaq stocks hit quite badly with the market sell-off yesterday, of course. We take a look at Google. Google's Alphabet, as is, was bearish and fell away. Pretty well all the tech stocks got hit badly last night with the market fall. Amazon down 2.5%, so that was quite a big move down. We're through the cloud here, holding the medium and long-term uptrends though. And Facebook reporting results last night as well, so that was quite key as well. If I just click on the Facebook shares here, we see that we were bearish below the cloud, so that's been a factor as well. So interestingly, we've still got very good medium and long-term targets here, but short-term Facebook pulling back now. It'll be interesting to see how they do in trading today. That's it for today. Until tomorrow, happy charting. See you then.